Believe it or not, recessions are not all bad. They are a great time to get rich. So keep watching for my secrets to capitalize on a down market. Now I know everybody's questioning about whether or not we're even in a recession. It doesn't matter. At some point you will be in a recession. But what I'm seeing here in 2023, there are some big things coming up that I think could be dangerous. And there could be a lot more layoffs. We can see a lot more issues. But ultimately, I want to be able to have you focus on these fundamentals. I'll make sure you make money no matter what. So one, build cash reserves. This is essential. Even if you have a cash reserve, maybe you saved up 6 months of expenses, which I recommend at least having, you might want to build it up towards 12 months of reserves. Many times, especially those that are in the tech sector, we've had a few clients already that have been laid off from their tech jobs and they're now scrambling to find work. The problem is there's all these tech employees have been laid off from big companies like Google or Amazon or whoever it might be, and now they're all trying to fight for the same jobs. You want to make sure you have enough cash reserves so you can pick the best opportunities and have some peace of mind in the meantime. So I would recommend that as number one, build your cash reserves to at least 6 to 12 months of your monthly expenses. As a bonus tip here, I would also say this, start getting lean and mean. Now I don't mean getting all cheap. I don't mean that. Don't live in a cardboard box. I don't mean go and clip coupons for the rest of your life. What I am saying is be very wise with the money you're spending. This is something that will help you build cash reserves, but it'll also help you if things do get tighter in your own personal budget. You want to make sure you can kind of trim the fat a little bit. Just get a little bit more lean and mean so that you can come out strong no matter what happens. Now, number two, I say this, is ignore the news. The problem is that the news, most of the time, if you ever hear about it, it's too late, right? Not to mention, the news is just telling the masses what they already know or what they already want to hear. The masses have pretty much always made wrong financial decisions. Think about it. If the masses and everybody paid attention to the news and they were reacting accordingly, everybody would be rich, right? If it really worked, wouldn't they be rich? No, it's not happening. People are actually living paycheck to paycheck. And even if they're not living paycheck to paycheck, they haven't saved up enough in their 401ks or IRAs to even really have any sense of real financial freedom. Why? Because the news does not make you wealthy. Heck, even when I was a stock trader, we would even tell people, don't ever trade on the hot tips, ignore the news, just stay out of it. Now, if you are going to watch the news, here's the thing you can use it for, of what not to do. So for example, if the news keeps telling you, oh, the real estate market's crashing, great. Well, that means you should be buying. If they say, get out of stocks, you should probably buy stocks. If they say buy more stocks, you should actually sell your stocks. Usually whatever the news is, it's old news. It's gone. The time is gone. You're too late. The best thing to do instead is number three, is listen to real investors, right? Real investors, they ignore the masses. They don't do what the masses do because the masses get ordinary results and they're just ordinary people getting ordinary results. We don't want that. We want extraordinary results. Real investors do the opposite, right? In fact, I would just tell you just to do the opposite of anything you hear the mainstream people say. If that coworker at work or that family member of yours, that cousin or brother-in-law or whoever it might be is giving you all these nice little tips, do the opposite. Because whatever tips they're probably giving you probably suck. Okay? They probably don't work. But real investors, they got their boots on the ground. They're in the trenches. They see what's happening real time. They're finding things out before the news ever finds out. Those are the people that see stuff happen. So for example, I remember at the end of 2022, many times people were thinking, oh man, I thought I could sell my house for top dollar, but I can't. Well, guess who knew you couldn't sell your house for top dollar? Real estate investors that were investing in the summer saying, hey, that's not working anymore. They knew by the previous summer what most people would finally acknowledge to be truth by the end of 2022. Here's another one too. Did you know at the beginning of 2023, the first few months, buyers are actually coming out in bigger numbers. So it's actually becoming a little bit better of a seller's market. Now, by the time you watch this or not, depending on when you're watching this, you might finally hear the news when it is. But guess what? I heard in January and February of 2023 that it was actually becoming easier to sell your property. And there's multiple buyers coming back out because those buyers didn't want to buy because of all the news that happened before. So they were holding off. They didn't do anything for the end of 2022, just like they didn't do anything in the spring of 2020 when COVID hit. And then everybody rushes to catch up again because people still have to move. We still need places to live. And guess what? There's still a housing shortage in the country. So what happens? Those real investors that are out there in the trenches see it first and you can respond appropriately. We even have a guy right now on our team that actually is selling his multifamily property, and he's selling it for about $40,000 more than what he was expecting to sell it for. Why? Because he's at the forefront. He's hearing this news as it comes out. So again, listen to real investors. Listen to people that are actually in the trenches doing it. Ignore the news. Ignore that financial advisor that's not an investor at all. Financial advisors are salespeople in suits, not investors. They don't know what's going on. They don't know what they're doing. They're just trying to sell you crap, okay? You want to buy real stuff. And that really comes to my fourth point, is buy real assets. That's something I think in 2023 people have ignored. So many people have said that inflation is going through the roof. Well, it's still going through the roof. Some people even think that inflation is going to settle this year. I actually disagree. I think that their interest rates are going to go up higher than most people expect. Some people think 2023 will only go up like maybe 0.5%. Bull. We're going to see this go up at least a full percent, if not more, in 2023, and it won't come down. I don't think the interest rates will come down at all in 2023. And I will also say this too, is that you're going to see things get harder for most people. This is why, because inflation will not slow down completely. It'll still keep going strong, which means you want real assets, because real assets gain value during inflation, while fake assets, things like stocks, even sometimes bonds and things like that, they lose money during these kind of times, especially during inflationary times and especially during recessionary times. And if you have even worse, where it's stagflation, where inflation is much higher than what the country is growing and then the economy is growing, then you're not seeing any growth except if you buy real assets. Does this mean that buying real assets, like real estate, for example, does that mean that it won't go down in price? Absolutely not. Real estate can still drop in price. But the thing that us investors have understood is that it's not just about the value of the asset. It's about how much income can it produce. Is it profitable? What kind of money is kicking off right now? For example, talk about a different type of real estate asset is self-storage. Self-storage is one of my predictions that in 2023 will start coming back a little bit stronger for those of us that know what's going on. Why? Because in 2022, they were selling for top dollar, much like apartment buildings were. They were selling for top dollar. It was hard to buy it and get good profit off of it. At least not the kind of numbers that we like, where we like double-digit type of numbers. Well, what happened by the end of 2022, self-storage all of a sudden shifted. All of a sudden, the same property you could buy for $1.6 million in August was selling for $1.15 million in December. The prices came down, but the profits did not. In fact, that just meant the profits got higher because you're buying at a lower price while the cash flow is still the same. So that's the thing, guys. When you buy real assets and you buy them at the right time because you're listening to what real investors are doing versus listening to the stupid old mainstream news or your financial advisor that doesn't have wealth themselves. They're not financially independent. They can't even retire themselves. Why would you listen to them? Okay? That's what I mean by that. Buy real assets. So when I mentioned real estate, there's real estate of various forms. You can buy rental properties, and don't always buy rental properties in your backyard. If you're in the western half of the United States, some of those properties may not be good to buy right now. You may want to look at the eastern half of the United States, especially the Midwest to Southeast. There's some great properties out there. There's also apartment buildings. You can buy apartments. You can buy, like I said, self-storage before. You can even buy raw land. Did you know you can buy and sell raw land? I have a raw land in partnership right now where we're making about a 48% return on our money. Is that guaranteed? No. Results may vary, disclaimer, whatever we need to put at the bottom. Basically, we're not giving investment advice and we can't make any guarantees. And there's risk with everything. But I'm making a heck of a lot more money than people that lost 20% in the stock market in 2022. Why? Because I bought real assets. It really just comes down to this, guys. If you're coming down to this fifth and final point, is just do the opposite. Do the opposite of what everybody's telling you. Ignore the news. Listen to real investors. That's the minority. Listen to those of us that actually have assets, that are actually making money. Ignore those people that are just the mainstream people. If you want ordinary results, listen to ordinary people. You want extraordinary results? Listen to extraordinary people that are doing the right things right now. You got to stay here. I invite you, if you haven't done so, click subscribe on this channel, like this video, share this video, subscribe to it so you can keep getting this up-to-date type of stuff to see what are the best opportunities right now. And if you think this video is good, check out this next video of failure versus feedback, because you never want to waste a good mistake, do you?